Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, June 17th, so already halfway through the week. Theme of the day, let's get right to that. A lot of momentum call buying once again in the market. I'll check to see where the put call ratio was today. I'm seeing something like around 0.56, but I'll double check that. Just heavy call buying again yeah, I would call them momentum names, growth names, a lot of software. I would say just overall growth. I think some people like to classify it as tech, but if you look at some of the other names too, names like Chewy, for example, just a lot of interest in growth names again. Overall, though, market breadth was kind of stinky today, and for most of the day, I don't think that really, affected the indices too much because you had some groups that were outperforming. This was a pretty good day for me because I've kind of been, not that I want to be all in growth names. They just seem to be the ones that are just acting better. So that's kind of the story and the theme of the day. We'll talk about how today was. But one of those days where you just kind of have to go back to like managing your greed, basically. Being happy with some gains and not pressing, into too much strength. And I think just kind of looking at the S&P chart, you can kind of see, for example, right? We went down. We kind of explored the bottom of value for the day. This is just a S&P 5-minute chart, and again, the value areas, the market webs indicator that we use, doing its job again. Basically saying, right around the lows of the day, around that 10:30 time frame, was when we started to get, and I begin to, notice what time these COVID cases that are coming out for Texas and Florida, they're not the same time every day. I try to figure it out to see if it's the same exact time, because the market is moving and the algos are, you could blame it a little bit on the algos, which I know people like to blame stuff on. But the bottom line is the market is moving based on whether or not Texas, Florida, and whatever state has an uptick in coronavirus cases. So it is what it is. Every time like I post one of these things on Twitter, like people seem to get mad at me. You're not measuring it right. I'm just looking at the numbers, and I'm in this. I'm just trading. I don't care about all the. Well, I do care obviously because I don't want to see the country go into lockdown, and I don't want to see people get sick. But I'm just giving information on Twitter, and so many people get mad at me. It's interesting that again, I don't want to like talk politics, but this stuff is affecting us, right? You hear on the other side of the world, China gets some cases, and they like shut everything down. We heard about this yesterday. They're like, okay, we're shutting down schools and so forth. Here, you talk about it, and people are arguing about how you're measuring the cases. So I don't really get it, but I'm not really here to do all of that to make to completely get it. But you have some trading opportunities because right now, what's bouncing from here is it seems like if the numbers aren't terribly bad, the market is able to get over it pretty quickly. And as well, I think also the market is focused on what is happening, in terms of the numbers in New York City. I think, again, I've been saying this for the last couple of days, but I think that's really going to be the tell. If New York's cases continue to stay low, which they are for now, knock on wood, it's overall going to help the market. And vice versa, if they start to tick up, I would think you're going to see some selling pressure. I just don't think, you can disagree with me. That's fine. This is my opinion. And again, I'm not giving out any advice or recommendations or telling people what to do or anything like that, but I'm just being observant and taking what I see as terms of headlines and also trying to plan ahead a little bit. Considering that if the market is moving on what Texas and Florida are doing, what do you think is going to happen if a big state has that? So that's on the lookout. And again, I try to plan things a little bit so that you've got a little bit of a scenario analysis. Bottom line, also on the upside, right? We talk about this during the day, and I thought it was great. I like to, give mentions or plugs to like broadcasts that I listen to. I try to listen to the Benzinga pre-market show that they do at 8 o'clock every morning. It's free. You could just go to the Benzinga site. I'm not affiliated with them in any way. It's just a good show. I'm a guest of theirs every once in a while. But they were talking about. They had a really nice conversation this morning about basically risk to return, but how good traders are always disciplined and watching their risk. I may have said it wrong on Twitter. They were talking. I think Dennis Dick was talking about discipline. If you're disciplined in this market, you can continue to be consistent and make money. If you get a little bit sloppy and chase at the wrong times, given today, and I'm just giving an example on this, but this is why I have the indicator on my charts, because we know that from a move to bottom of value to the top of value, that it's going to be sticky. Now, either it's kind of sticky and we move higher, or we do something like this and basically, give it back. But you have to know, like, that's a good place overall to say, hey, I'm going to take some profits in some things and not press looking for a break higher. Being, and as I said in the beginning of this video, just not being overly greedy. It's good to be a little greedy, right? Because we want to have bigger winners. There's a fine line between having some big winners and making sure that you do have big winners to offset some small losers. But you have to be cognizant of where the risk is not lining up that well. So I think that's a good example. So I will tell you, as always, I try to point these things out and also show you what I did. Not to just say what I don't like. See, I said something nice, right, about the Benzinga guys. But I also don't like guys who do these charts and tell you, oh, this is where you got your sell signal. I like to show you what I did, and then you can kind of say, okay, he tried to follow that, or he was wrong, because I'm wrong plenty of times. We talked about that in the Tribeca Trade Group Q&A session that we do on Mondays and Wednesdays. So we do a couple things. If you're not a member of Tribeca Trade Group, we do Q&A sessions for anybody, any new members or existing members who just want to go over charts. We do that Monday and Wednesday at 1 o'clock. And then, of course, where we kind of set up our day is 9 o'clock in the morning. I do live pre-market session. We go over charts. I go over setups. I'll give you my my setups for the day as well. But really, that's what we're trying to do is just basically give traders a plan for the day. And we talked about, again, I like to go over mistakes, and I did that at 1 o'clock. We were reviewing last week's price action, so I won't go into that because I already spoke about that for about 15-20 minutes today. But reviewing what happened Wednesday going into Thursday of last week. I don't think, now you could try and you could look hindsight 2020 to say that you got a sell signal last week, but it's one of those things where, hey, we just got a little bit in front of ourselves, right? As I like to say, over the tips of your skis with where price was getting towards the end of last week. That's it. There's no magic signal that you saw on the cues. They just got a little bit, the market got a little bit ahead of itself, and this was not a good place. If you added risk on these days, hopefully you did it in smaller pieces rather than, realizing that you're just going to do the same thing day in and day out. Something like this, you scale down and you should be reducing positions into that. Did I do that perfectly last week? No. I try to really do that throughout the week, but, there was some things like in Square, for example. So again, I'll get away from this topic because I'm starting to cut into what I already talked about today. But Square, for example, like I got caught in this position last week, showed a little bit of a, false move on the first attempt. But really what it comes down to is if you are going to add positions because you see opportunities like this, my opinion is you just kind of do it a little bit lighter, right? And you're making sure that you're taking off more than you're putting on. That's the games that we play basically on a daily basis to try to make sure that you're not getting super greedy into the wrong places, right? Chasing when the market is a bit overbought. Okay, so that's that. Let's talk about, by the way, so Square. Square is really funny. It touched 100. So this was a nice trade. I actually put this on Speaking of chasing a little bit is okay. If it's a nice signal. I mean, I put on a trade in Square yesterday, even though like I didn't get to do it on this. This was a really nice bullish engulfing. But I did put this on both in the tactical portfolio. I also put on some stock, so I chased a little bit, and I took an exit at like 99.80 today. But this thing, what I thought was funny is this Square did basically ticked at 100, which was what my target was for the day. But the other thing that I went over too is if you take a target, oftentimes you're able to get back in a little bit cheaper. Right, so I did not put my Square trade back on. I'm still holding the last piece, but we'll see what it does. Right, we'll see if it kind of chops around. But you know, if you're doing this exercise of taking profits on these big rips in the market, if you like names, you could continue to kind of hold a small position and maybe add to it when it sells off a bit. All right, but really strong in this name early on, basically till about 12:40 in the day. Really, really nice. Another name that we saw call buying earlier in the name that we got involved in. I think on Monday is when I added this position. Was this Cloudflare name? So really nice, and this thing closed at 36. I'm still holding my last piece of this too, after hitting a couple targets. So let me go to the trades, but you could see where's Square. Yeah, 99.70. Sorry, not 99.80. I was trying to get 99.80, but couldn't do it. And again, that's just a trade from yesterday. The net, again, fabulous. I took a target at 34. Did I take it? I think I took another target in this, didn't I? Maybe not. Maybe I. Let's see. Yeah, I still have some on, so I don't think I had for some reason I thought I hit two targets today, but nope, not so much. DHI, the housing numbers continue to come out strong to quite strong. This thing did not close on the highs either today. I'm eyeing that VPOC, and that's basically what I'm aiming for in the last piece of this housing name, DR Horton. I'm also holding Zillow. I thought I was going to get a target in Zillow today, just didn't close on the highs. That's okay. I'm interested in holding this one a bit too. Some day trades, I stink at weekly calls because I think this actually, I looked at this at the highs of the day. It was only marking around about the same as my price. I dumped this trade. I just don't have patience in weeklies if they don't work. Right off the bat, I usually dump them. So you could see I dumped this at some point today. Yeah. And here I'm even saying I hate weeklies. But I'll try them every once in a while because, if you could hit something very quickly in weeklies, it could be very nice. But again, the main thing for me trading if I'm going to participate in trade weeklies, it's going to be small size because I only put in what I'm willing to risk in terms of weeklies, right? So does that concept make sense? I think people sometimes look at it differently. But if you're going to put something in a very short-term trade where it has to go, fast for it to work very well, I will only put in, an amount that I'm okay with losing, right? Because too many things could go wrong with that. You need too many things to go right for a trade like that to work. So you get traffic in this stuff. I traffic in it every once in a while, but I'm just never going to risk a lot of money on a weekly call option. This one actually worked too. This is CNK. I think it did anyway. I just did not stay. Oh, I guess it didn't. Ended down 3.9%. So I dumped this one too for cost. So again, some things, especially like short-term calls, which I view as July as short-term calls, I'm in and out of pretty quickly. So that's Square. MDB, this kind of, you could look at probably about 5 other software names or software/cyber. I'm still going to watch this name tomorrow. It is now approaching the gap, the earnings gap. So we'll see how this does this. I took off the whole position today because, again, I was just in July calls. Maybe stock might be a better way to go here, but that'll be on the watch list for tomorrow. But if you look at names like TTD had a big day, but again, you had, I mean, this thing printed at 395 today. So, still finished up 2.8%. Now, I didn't trade this one, but if you're not taking profits and a name goes up to from where this thing closed yesterday, around 372 to 395, similar price action to that square, got to be taking, in my opinion, some money off the table on this. And we talked about too in the Q&A session, trailing stops, making sure that you're continuing. These things are a little bit painstaking to keep adding, trailing stops to names, and making sure if it continues to rally that you take off that trailing stop and what's called, ratchet the trailing stop higher. But this type of discipline is how you can stick in winners longer. Another name that we had talked about yesterday was Chegg. Let's see where this thing closed on the highs. Pretty nice move and close enough to that top of value, I think, for a decent target. But another growth name up 5.7% today. Sticking with the C's, let's see where Chewy closed fine. This is another one I started today. I love the move into the 20-day moving average. Also, I've seen this in a lot of charts lately too, where you break higher, you digest, and then you pull back to that previous resistance, right? So I think Chewy has a chance to kind of continue to go high, possibly take out the highs. And I even got into this one a little bit late too. 49.27, and I took a target at where is this? $50. Right, so not that healthy of a target, but again, I like to make sure, like, if I'm going to hold something and make it into if it's going to be a swing trade, I'd love to take a little bit off that day, even if it's not a huge gain. It just feels so nice to have some in your pocket, and you're reducing your risk a little bit. So I continue to like that strategy, and I was holding some IWM puts from yesterday that worked pretty well. I also have kind of been trading around this Donkey Kong position. Just kidding, not Donkey Kong. DraftKings. And we planned this one out perfectly in the room. I said, where am I going to take a target? At 42, right? And now I can continue. I've been trading in and out of this one, buying some dips, selling the rips. And that's been working pretty well with this one. And again, another one that's seeing, like, it sees a whole bunch of what I call a little bit of, like, it's like machine gun fire momentum calls. They're not big calls. They're just somebody's in there, like, ding 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 ding, like hitting lifting the ask and buying calls whenever a name gets a little bit of momentum. Again, these guys don't know anything. They're just following price action a little bit. That's the same thing with Activision, right? All of a sudden, Activision gets to the highs, right? And if, by the way, another stock that's looking pretty good on the growth side, made new high. I don't know if that's a closing high, but as soon as this thing breaks value, it's like ding 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 ding, a whole bunch of, like, aggressive calls that go up. All short-term stuff, either June or July. And again, these guys, in my opinion, they don't know anything. They're just it's all momentum. Right, these guys have models, and when it breaks out of a range, they're buying calls to play a breakout of range. That's basically the majority of what we're seeing. We did see besides the short-term stuff, because when I talk about momentum call buying, it's all really short-term stuff. This one, now this is a hell of a ways higher, but look at this trade in Vive. So really healthy trend and very little dip on earnings. By the way, before I show you the option activity, move back, a nice move up on earnings. Where'd this thing check back to? Just like I was talking about with Chewy, a retest, not as exactly the same pattern here, but look at the retest back to top of value as well as to the previous breakout zone, and up and away we go. What were they doing here? This was the December 270, 280 strikes. So that's that's really far up there. But they're giving it time. So what I do with these types of trades, I did not start anything with Vive, but I kind of just put that order in the back of my mind. Um, and just say, hey, someone's positioning December. And then if we happen to get a pullback in Vive, then I kind of remember, hey, there's a lot, somebody really likes V for the long term. They maybe have some fundamental reasons why they like it. And it kind of just gives me an idea to remain, to watch it. But for me, I'm not going to chase a name, another one of these software names that's up 3%. I'll be a little bit more stealthy than that and wait till this thing kind of comes in. Now, if it doesn't come in and it's up another 3-4%, well then, I lose. But you can't chase every one of these. I chased Square yesterday and it worked. That's called getting a little bit lucky, but it's not always going to be that way. All right, so that's I think that's it for today. One thing as well I wanted to just talk about before we're there. Friday is quadruple witching. I'm getting a lot of questions about quadruple witching. So what's going to be interesting about this is one of the things that people don't understand too much, right? Of course, it's monthly option expiration, and there's going to be. I'm hearing that that's good. It's going to be a pretty decent expiration in terms of positions that are still outstanding. But that's just one of the witches. One of the ones that I'm also more concerned about is index rebalancing, right? All of the S&P and NASDAQ indices rebalance. Now, they do that on the close, but there's all types of pre-positioning for that throughout this week. So remember that in March, the S&P postponed the index rebalance because of COVID and people were investment banks, traders were working from home too, so they couldn't really coordinate that index rebalance. So you're basically looking at a 6-month rebalance, which is a lot. So there's going to be a lot of volume on Friday. Don't forget on the open index futures expire, so you'll see a lot of volume on the open as well. So number one, what kind of question? What will you see on Twitter? Oh, why is there so much volume in Apple today and Microsoft? What's going on in those names? Well, it's just kind of to get in front of those questions. It's index rebalancing. All of these names get reshuffled in the indices, so they'll be heavy. They'll be heavy volume, much more higher than normal volume in every S&P 500 name, in every Nasdaq 100 name, and you'll see some. You may see some whippy moves. So, the other question that I'm getting is, well, what do I do on that day? I would watch a risk. I would be very mindful that there are going to be some huge volume and whippy moves, especially around the open and especially around the close. So the adjustments that I would make if you're not going to take the day off and if you're going to trade in that day, watch your position sizes. Also keep in mind what you've already got on. If you've already have existing trades on, they're going to move. Now, you may get buying opportunities, right? If a name like Apple is, I'm just making this up because I don't know, but let's say Apple is getting reduced. The weight is getting reduced in the NASDAQ, and the stock goes down a little bit. You may get a buying opportunity, late in the day on Friday. But bottom line is there's going to be some abnormal moves. And you'll see this as well on the weekend. You're going to see a whole bunch of technicians who don't understand index rebalancing say, "Oh, look at all the volume in this name on the breakout." It's just it's a one-time, not one-time event because it happens quarterly. In this case, semi-annually. But be mindful of that, and just be smart on that day. That's the only thing that I can really tell you. Going for quadruple witching is don't go crazy trading, and I think that'll help. All right, guys, thanks for watching. Have a great night, and I'll see you tomorrow.